Hello traders, it's Christina Barthenidu, forexam.com. At this video, I'm going to give you some key levels to watch for pound dollar, euro yen, and gold, as we are all waiting for Friday's non-farm payrolls report. And there are also some key data releases out of Japan, including Monday's GDP data, so yen pairs may also face volatility. So let's first have a look at pound dollar, which had a nice rebound from a 6-month low 1.2485. And so the question now is whether this rebound will be sustainable in the coming sessions. Well, if you look in the short-term picture, the 1.2730 or 1.2755 region has been quite constraining lately. So, well, this area also includes the 61.8% Fibonacci retracement of this up leg, as well as this key resistance line from the 2.5-year high 1.3428, as well as this former support line over here. So that area will be crucial to determine whether the price price will continue higher and towards the 200-day moving average at 1.2820. Slightly above that, the 50% Fibonacci mark of 1.2865 could be also a key barrier as the 50-day moving average is approaching that zone. And then higher than that, we may see some consolidation near 1.2960 before the price finally reaches the 1.30 or 1.3045 territory. This could be crucial for the pair to resume its to boost the buying confidence. As long as we hold below this territory, downside risks could remain alive. So I would like to see a clear, sustainable move above this zone to become more confident that this downward path is over. Now, in case the price reverses to the downside, so the 1.2626 region may provide support, a break of which could create extra selling pressures, probably towards the 1.2530 zone, where this former constraining line is located. And then below that, if we fail to pivot here, the sell-off could stretch towards the 1.24, 1.2440 restrictive zone. Now, if we look at the technical indicators, we don't have clear signals, but as long as the RSI holds below 50 and the stochastic oscillator is near its 80 overbought level, there is a risk of a downside reversal. And now looking at euro yen, well, the pair had also a nice rebound lately. There is a nice candlestick pattern created around the 157 territory, so that makes me somewhat optimistic that this rebound could continue higher, and the technical indicators seem to be supporting this case, as well as the RSI and the stochastic oscillators are already pivoting near their oversold levels. So I would have allowed more increases in the coming sessions, but to confirm that, I would like to see a clear close up of the 158 level, which has been acting as strong resistance lately. This is where these long-term restrictive lines from 2022 are placed, so a clear move above this territory could be encouraging and could be the trigger for a nice rebound towards the 159.80 barrier, and then above that the 20-day moving average and the 50-day moving average at 161.35 and 162.70 at the moment could be the next barrier before we reach this important resistance line from July, seen near 164. Now, if the price reverses to the downside, remaining below 158, perhaps we may see some stability around the 157 number, as we saw this area acting as support earlier this week, and then failure to hold here could take us down to 154.50, 155, where another key support line coming from February 2022 is placed. The failure to hold here may trigger a faster decline back to 153, which was last seen back in November 2023. And finally, looking at everyone's favorite gold. Gold had an interesting rebound lately as well, but overall, it couldn't surpass the 2650 and 2660 territory, which is crucial for a bullish continuation. So I'm still speculating that a negative reversal is likely, and we can see that the RSI has yet to move above its 50 neutral mark. The stochastics seem to be slowing down despite their latest upturn, so I think that downside risks remain in this market. So if the price fails to surpass the 2660 region, and more importantly moves sustainably above these resistance lines seen near 2685, then perhaps a reversal towards 2585 and 2600 territory over here could be possible. This is where the 38.2% Fibonacci tracement of this up leg from June 2024 is placed. So I would pay some attention here, and if this proves easy to break through, then the sell-off could stretch towards the 2450 and 2550 region, where the 50% Fibonacci mark is located. If there is another failure here, then perhaps we may see a sharper decline towards the 2483 and 2500 level, where the 61.8% Fibonacci mark, as well as this key support line are all placed. Now, if we look to the upside, if the price successfully surpasses the 2685 number, then the next resistance could emerge near the 2700 level, a break of which could put this downward move into question, could make a new higher high, probably near 2750. While additional gains from here could take us towards the 2800 level, which the price almost reached back in October. That could be crucial if we see a successful move above this territory, and particularly above the 2810 level. Then there might be more gains ahead. So that's all about my analysis. Thank you for watching, and see you next time. Bye bye for now.